Retail giant Woolworths led the pack on a busy reporting day with a record $2 billion profit. Earnings are up, and the company also announced it would be spending $700 million on a share buyback. And for all the talk of a rejuvenated Coles, Woolies sales came in 40% higher. Earlier I spoke to Woolworths CEO Michael Luscombe. Michael Luscombe, thanks for joining Lateline Business.
Pleasure, Bridget.
Well, the market certainly liked the result. Shares were up 7% just after opening. What was the most successful area?
I think it was just a great team effort on behalf of the 190,000 people that work for our great company. We had a decade of double-digit profit growth, and we had a bumper year in 2009 where all the moons aligned. So to come out with a double-digit profit increase in the 11th year, I think, was just a tribute to the team, particularly considering it was a year of two halves. When we got to Christmas, a lot of things changed. We went from inflation to deflation in just about everything. We ran out of the effect of the stimulus payments, and so you needed to really be really good retailers to continue to operate profitably.
Do you think it was the end of those stimulus payments which hit the consumer electronics division? Second half profit was down.
Oh, look, it was a combination of things. We clearly had a change program and still underway within the business. The businesses that we have changed did both in terms of sales and EBIT a terrific job. The first half we had a great profit result for the group. The second half we saw some pretty tough pricing competition. As a result of that, we've seen at least one business being taken over. We had a decision to make. Either we continue with our pricing position, that is not to let a sale walk out of our door and be very competitive on price, or to sit back and watch the sales go elsewhere, maybe be profitable, but having a big problem with old dated inventory at the end of the year. We chose to get on the front foot and continue to be aggressive, and we had a reasonable sales result. We certainly didn't make money in the second half, but we're now back in profit in this new year.
So Dick Smith, you're expecting that to perform better?
Oh, I've got no doubt they'll perform better.
You've talked a lot about today what customers want. I know you've done lots of survey and feedback forms. What do they want?
Well, they actually want great value at the moment, so they're clearly not interested in, if we talk about non-food product, buying things at full price. But I think there's a bigger trend happening in food, and that is that people really are interested now in what's good for them. So whether it's organic or free range or gluten-free or just natural, we're seeing big uplifts in that area. And of course, the launch of our Macro brand in the supermarkets that covers many of those areas has been an outstanding success. And there is no doubt that that trend, I think, is one that's going to be with us for some time to come.
That trend, this new store format, is that your way that you're going to take on a revitalised Coles?
Oh, look, what is very important in business is that you have your own strategy and you go your own way, and you certainly don't have your strategy that is totally just a response to someone else. What we have seen in the past year in food and liquor is that we've actually grown market share faster than anybody else, substantially faster than anybody else, and faster than the marketplace. What is also very evident is that we've been in some 24 months in development of this, as we did with the 2010 before we initially launched it. So this is not some new decision that we've made in response to what someone else is doing. We believe that this is a true response to what we've been hearing from our customers about what they want from a Woolies supermarket going forward. We've also had our guys and girls travelling the world and having a look at what's new and exciting in retailers across all the continents, and tried to bring them back and translate them into an Australian experience.
The new area for Woolworths is hardware. When will customers see these new 150 stores opening?
Well, the first of them will open in the second half of next calendar year, right on schedule. And thereafter that, we will continue to roll them out for the foreseeable future.
How much capital and time will need to go in to establish all these 150 stores?
Well, it very much will depend on what happens in terms of the mix between us having to buy land and then develop it ourselves and then finally sell it on.
It could be a very big cost.
Well, it could, but luckily our experience to date has been that we've got a lot of believers in the model, so we're finding a lot of owners of the land actually want to develop and build the product to our specifications and remain landlords. So our initial view of the percentage that we would have to buy the land and do ourselves has been recalibrated substantially. So we haven't given any guidance on the capital, but each half will actually let people know what we've spent in the previous half on this. I think one of the important points here is that some people are really positioning this business as a startup. It's not a startup. It's actually picking up a very successful model from overseas, along with its owner, to partner with a local strong player to deliver a model that is proven to work. Very much the way that Aldi came to Australia, proven model, came to Australia, Costco's come to Australia. And we're seeing the Gap. No doubt they'll be successful as well. This is not a startup. This is actually a replanting of an existing model.
Michael Luscombe, thanks for joining Lateline Business.
It's been a pleasure, Bridget.